All right, cool. Hi, welcome everyone. We're super excited to have a few guests with us. We're just excited. We've gotten to know, I guess, Sarah, I've known you and your husband Alex for a while, but we've gotten to know Chelsea and then a little more recently Ruth. So just super excited to have everyone. And we'll go ahead and have everybody introduce themselves. And Ruth, if we'll start with you, if you don't mind, and I'd love to just kind of hear just a quick background, and then we'll kind of go into questions after that.
All right, my name's Ruth Hiller. I'm from Boulder, Colorado. I founded my company, Yes MF, 2 years ago. I don't know what you're thinking, but MF stands for multifamily. And I always say, should you invest in multifamily? I won't swear, I'll say, yes, MF, you should. And so I've been involved in the multifamily space for going on, well, actually 20 years, because I had a family property, but really seriously, the last 4 years.
Awesome. Sarah, can you introduce yourself?
Yeah, I'm Sarah May. I'm also in Colorado, in Denver. And so Ruth and I are neighbors, and I've been in multifamily investing for over a decade. I started out just working my career as an engineer and wanted to make some extra income on the side. So started buying small rental properties and then learned about, partnering with other people and doing syndication. So I founded my apartment investing business, Regency Investment Group, about 6 years ago. And we've done 8 projects and have around 150 investors that work with us on our properties, and we mostly invest in Colorado and Texas. But kind of like I came from a totally different background in engineering, and real estate just provided that extra income and the avenue I was looking for. So excited to talk more and answer questions as we get going.
Awesome. Well, welcome. And I think we're all jealous of Chelsea's background. So Chelsea, if you could introduce yourself.
My name is Chelsea Garber. I'm born and raised in New York, but as of 2 years ago, I'm living in Park City, Utah. So obviously love the outdoors and the mountains. I am the founder of Ascend Equity. We're a multifamily investment firm, and our portfolio is mostly in Oklahoma. Own a property in Columbus, Ohio as well, and focused really on value add opportunities and to help not only, to gain financial freedom through passive investments, but really to help, our communities and residents thrive. My professional background in New York, I have owned and still do own multiple design firms. So I have a keen interest in design and aesthetic, and have brought that philosophy of beautifying like your surroundings, you elevate the quality of your life, and of course, providing returns along with that into my multifamily investing career. So I'm also the founder of ROI by Design, and we're a value enhancing design and remodeling firm, and we largely work in the C and B class multifamily space. And I love multifamily investing, syndicating, getting to partner with awesome people, particularly some really great women and some men too. And yeah, just happy to share the ups and downs of being a multifamily investor.
Awesome. Yeah, really appreciate you guys kind of going over your background and just being here this evening. Really excited to kind of dig in to get each of your perspectives as we go through some questions. So I'm going to turn to you, Ruth, to start again. And we're going to start by just asking the question of what separates you from the rest of the multifamily investors out there.
I come from 3 generations of multifamily owners. The thing that started my journey is I owned my own 118 unit multifamily property, but when it was a family property, when I got it, I didn't really know how to run it. And so I spent thousands of dollars and thousands of hours learning how to run a multifamily business by studying in a mentorship program. And, I apply the things that I've learned. I just came back from a trip from Tony Robbins. And one of the favorite things I heard, was that one of the groups, he said that true wealth is when you can extract the most joy from what you already have. And because we're always chasing wealth, but that really brought me home, like whatever you have, right? If you're always just chasing something, like be excited about what you have. And so I focus a lot on mindset. So I think that's what separates me.
Awesome. Yeah, that's great. Sarah, how about you? What separates you from all the other investors out there?
Well, I guess being on this panel, right, being a woman, there's a little bit of a discrepancy in, the number of women in multifamily, but I think Ruth and Chelsea can agree there's a lot more now than there has been in the past. And it's really exciting. Like Chelsea was talking about before this call, like women kind of bring a different perspective. We're good multitaskers. We can maybe think outside the box sometimes. So that's one thing. But then surprisingly, people are, they like the engineering background. I was a numbers person before I started in multifamily. So with that usually comes being very detail oriented, somewhat risk adverse, although I'm, have learned to be risk intelligent, I would say. And then also just being really cognizant of communicating with investors. I think that's super important. And so we always try to tell our investors what we're doing, if it's going good, if it's not going good, and communicate that on a monthly basis along with where we originally told them before the whole project got started. So communication is a key. And I think just being very detail oriented.
Awesome. Yeah, those are all fantastic traits for sure. Chelsea, how about you?
So as I mentioned earlier, I have my professional backgrounds in design and construction over 15 years in New York City and LA. And so I definitely bring a design and aesthetic driven approach to my multifamily investments, and just putting a lot of attention, like Sarah's a numbers person. I'm a design and aesthetic person, but attention to details, because regardless if it's workforce housing or a brand new development, I really believe and have seen that when people thrive at home, they thrive in other areas of their life. And a lot of it is about the quality of the community. So not just providing safe and clean and affordable housing, but a place that is, you feel great to call home and you're happy to live there. And so it's definitely that. And I think also, like, the lady said, just being a woman in the space, we definitely bring something different to the conversation. And I think we naturally are good listeners and can hear, both sides of the stories, because there's a lot of listening in multifamily. You're listening to your property managers, your team members, your contractors, and sort of just being a liaison between all people is, I think, I'm sure I shine, and I'm sure Ruth and Sarah do as well in that position.
Awesome. So kind of next question, and Chelsea, I'll kind of start with you and then kind of wrap back around. But what are some lessons you've learned along the way, and then anything you wish you would have done differently?
Okay, how do I answer that in my shortest version of that? Okay, lessons I've learned. Well, like most people, I entered the space in 2019 via way of a mentorship program, which was great, and it's all about getting your first deal done. However, there's not a lot of programs or mentorship or teachings around what do you do after you get your deal done, like asset management, working with team members, property managers. So I always, when people now ask me, oh, like what coaches do you recommend? I'm like, well, I think there's a lot of great coaching programs out there, but I think a lot of them lack the real life. Okay, you got to cross the finish line, which is really the starting line now. Just getting with people, partnering with people that not only are a couple steps ahead of you in the space, but have a proven track record. And I'd say a lot of the problems that we've bumped into have usually been money related. So, we came up short on reserves going in at closing because maybe our attorney fee came in higher, or, pricing CapEx went up 20% because nobody predicted a pandemic and all of those things. So just going in, being ultra conservative in your underwriting.
Awesome. So Sarah, kind of same question. So what are some lessons you've learned along the way, and anything you wish you would have done differently?
I guess just for people who are starting out, I'd say get really clear on why you want to be in multifamily, or in a real estate investor in general. I sometimes tell people, I call this their investor DNA, like know know your why, know what you're good at, what kind of projects you want to do and don't want to do. And like actually the narrower the criteria you can come up with, the more successful you'll be. So having a small niche that you're really, really committed in finding a deal that meets those criteria can really help you. And then also like, we'll probably talk about this later, but there's different ways to invest. So you can invest as the sole owner of a property. Like that's how I got started. I would go out and, save up money and buy a duplex. So you can be an individual owner where you also have all the work, or you can be a passive investor in a syndication, which is just a group of people doing larger projects. And then you don't have any of the responsibility, but you also, don't have the control. However, you still get to own real estate without any work. Or, with Ruth and Chelsea and I do, we're kind of the active people putting these larger deals together and working with the passive investors. So figure out if you want to be an active investor or a passive investor, and what you really want to do. And then lessons along the way, there's, I think in this business, you just have to expect the unexpected. Something always is coming up, and just consider it a learning opportunity, and know that there is a solution to almost all of these problems, even if you don't know what it is right out the gate.
Awesome. Yeah. I mean, it's, oh, I thought it was all rainbows and unicorns. So Ruth, same question. So what are some lessons you've learned along the way, and then anything you wish you would have done differently?
I always say, don't be swayed by emotion or fear of missing out. That's always been like, because we're in a mentoring group and every deal looks good. And I also like what, Chelsea said, like to me, the most important person on the job is the asset manager after the deal closes. And like she said, like a lot of programs, don't really talk about that. So there's a lot of new people. So always be careful, like, who, I always want to make sure I know who the asset manager is and, what their track record is. Also, I always tell even newbies, like do a basic program so you can learn how to dissect the business plan, because they all look good. And there's always stuff that you should look at. And I think the biggest lesson I've learned this last 3 years is about the bridge loan. Now, I'd like to stay away from those. And I did invest in some deals that do have bridge loans. I'd say most of them are doing well, but one of them is a little bit upside down on it. And so that would be a big no for me going forward in a lesson. And then a lesson I learned years ago, when I had some money about 25 years ago, I bought my own multifamily property. I'm like, oh, we come from this multifamily family, I can do it, right? And so I didn't know how to do due diligence. I didn't know how to do lease audits. And so I lost a ton of money on that. And so I say, like, that's the thing, don't get FOMO, educate yourself, so you can figure out if it's the right thing for you.
Yeah, that's great advice. So kind of segueing into our next question, I'll actually start with you, Ruth, because there's so many moving parts in any one multifamily transaction, like you said. So what part of that process do you like? What role do you like to play? And then how do you structure your partnerships around maybe filling those areas that you're not as excited about?
My gift is working with people, and my job on the team is capital raising. And usually there's, the person that finds the deal, there's the person, and works with the broker, there's the person that underwrites the deal, there's the person that, secures the lending and puts up the earnest money. It could all be the same person, and then there's someone that if you're going to do a syndication, you need to have investors. And so that's my job, is to, educate people about the process and raise money and bring investors in the deal. And what I look for, I'm passively invested in 12 deals, and I'm a general partner in 4 deals. And what I look for it to be a general partner, even a passive investor, is the track record of the team and who's the asset manager, and are they a good asset manager in that marketplace? Have they managed A properties before, or have they just managed C-class properties? And the thing that I look for that needs to be in place, like what are the systems in place as a general partner? Like, what are the communications? What are the meetings like? And so I've learned a lot in the last 4 years, like trying to narrow that down, what works best for me. I work better. I'm not the person that creates the system, but I work way better when there's a system implemented.
Yeah, 100%, especially with, again, so many moving parts. You got to have systems, or else, a lot can slip through the cracks. So I'm going to turn to you, Chelsea. I think I would know, but I'd love to see kind of what role you prefer, and then also for those areas that maybe you're not excited about. Again, how do you structure your partnerships to build out a good team?
Yeah, so when you first come into the space, I think you're wearing many hats because you're trying to figure out sometimes, am I a you're always raising capital, regardless of, I feel like, what your role is in the space. That's always a team effort, although there are some partners certainly who shine there. I've always been kind of, like Ruth said, really like a relationship based. So, sourcing deals, doing some initial underwriting, broker relations, lender relations, contributing to, depending on the size of the deal or who's on the deal, to, hard earnest money, deposits, et cetera. There's the whole like go into multifamily with no money, I think, is also a hoax that they sell you on in a lot of these coaching programs, because there are a lot of upfront costs, and it is possible to do deals with no money, but the greater your responsibility and the more value you bring, obviously, the more ownership you usually have in the deal. And it's kind of just trial and error and figuring out what you like and what you don't like. And, it's the same with working with partners. Like when you get into the space and, don't go find somebody who's going to not compliment you, right? Not that does the same exact thing. So I have members on my team that are absolute wizards in underwriting, and, we all do a little bit of capital raising, like we said. So it's fun because you really do get to experience all parts of the business. And then I think as you advance in the space, you really start to kind of shift into your lane and focus in that niche. And I think that's where you can bring the most value.
Yeah, absolutely. That's very true. And then Sarah, same question to you. It sounds like, you started with a duplex, you had to do it all yourself, and you've grown to these large syndications. So I'd love to, hear a little bit more about, what role that you've kind of fell into over your career.
Yeah, like Chelsea was saying, I think you all start out kind of doing everything, which is good because then you kind of learn by going through the process and figuring stuff out on your own. I think it's kind of good to even manage your own properties when you're getting started if you want to be an active investor long term. I would say at this point, I am primarily asset management and capital raising. I think I would love to delegate more of the asset management responsibilities, but just being that detail-oriented person that I am, I do like kind of being in the details and finding ways to optimize the business plan. I enjoy that part. And that's usually through kind of the asset management role, that you know everything that's going on and you can find levers to turn and things to tweak to make things better. But with partnerships, I would just say set roles and responsibilities up front. Like that is absolutely key. I really didn't do large partnerships until 2022. And a couple deals, there were a lot of general partners involved putting the deal together and figuring out how do we divide up ownership of the general partnership fairly. I think you need to have that set up front. Like, okay, certain amount goes to capital raising, certain amount goes to asset management, certain amount goes to signing on the loan and being a KP, and then all these other responsibilities like putting up front money and things like that. But just having it laid out beforehand so people can kind of buy into it before signing on as a GP, and then everybody knows they're getting as fair of treatment as you can really make in these deals. So laying out compensation structures up front, and then also roles and responsibilities, because you always need that asset manager type person, even though it's not super glamorous and it's a lot of work. Just make sure one of the team members really wants to step into that role and has had experience doing that before, and that'll set up your deal on the right foot getting started.
Awesome. Well, Chelsea, I'll kind of next question for you, and this can kind of go in a bunch of different directions, but what is your favorite part of multifamily? I know I have a bunch of things that I like doing and all that. One thing that is always is really fun for Hayden and I. So we have all of our staff, we have all their birthdays, and so we send them crumble cookies, and like, who doesn't like that? So Anyways, so Chelsea, just curious to hear your favorite part of multifamily.
I love the people, whether it's working with our on-site staff, the residents, the contractors, the strategic partners. This is just a people-oriented business. And I think when you put people first as a general rule of thumb in anything you're doing, you succeed. And I've seen it happen with some of the communities that I own. When you put a keen interest into the people who are particularly working at your properties, like you said, they really value that. When they feel really valued and heard, they treat your property well, and it just all trickles down, right, at the end of the day, to you, the investor. And ultimately it's a partnership. I always consider these people are like our extended family in some senses, because you're talking to them all day, every day, and you and them as a team are responsible for hundreds of units and families that live there. And I take it as a responsibility to do right by them. So, I come from a people first mentality.
Awesome. Love that. So Sarah, same question to you. What's your favorite part of multifamily? It sounds like may not be a role under the asset management, but anyways, so
Yeah, I like parts of asset management.
Oh, okay, there you go.
But, no, I'd say like the simple 2-word answer is distribution day, like giving money back to all the investors, meeting your plan, like, everybody's happy when you have distribution day. So I love in this business, we can partner with people who don't have the time or inclination to go, necessarily go buy a multifamily themselves, but they want to own real estate and get to participate in that. So it's always nice to kind of, execute these business plans the way you hope and be able to distribute the money to the investors. That's really fun. Like we've brought in some friends and family over the last few years, and they're always so excited, like to get distribution checks. And not that every deal always performed as expected, but when you can make distributions, it's a really good feeling. And then second, I think Chelsea has a design side. I have a little bit of an artistic side too. So watching HGTV for years, and now we get to do that with apartment complexes is really, really fun. So I like that part too.
That's awesome. It's cool. Everybody loves good before and after picture. So cool. Ruth, what about you? What's your favorite part of multifamily?
My favorite part about, is like she said, distribution day. And I also love getting the K1s and not paying, saving a lot of money on income tax would be one of my favorite things. So I love that. And then, passing on, the savings and teaching. I love teaching women about investing. So that's also my favorite thing to do.
Awesome. Yeah, all really great advice. So now we're going to kind of dig into, how, before that deal comes, how do you identify and really evaluate an opportunity? Regardless of the role, you've got to feel comfortable getting into these deals. And so I'm going to start with you, Sarah. How do you determine, yes, this is an opportunity, or yes, this is a group I want to partner with on this project?
Yeah, there's a lot that goes into deciding to invest or not. I'd say that knowing the team who is putting together the deal is a really key aspect. And it's often the hardest part, because if you don't know people personally, it's hard to get that sense. But definitely dig into their bios that they give you, check out their LinkedIn profiles, do what you can. So know the people, I'd say, is first and foremost. Also, just know, I always like to ask who's doing what. So that same factor of having a good asset manager, like make sure that they've, as a team, already sorted that out, and who's going to take the major share of the asset management work. And I guess the other thing is look at the underwriting. Even if you're not a numbers person, there's a few simple things you can look at to really know if they're being conservative or way too aggressive. So make sure that the annual rent growth is reasonable. Usually in most markets, it's 5% or less. And typically, if it's a longer duration ownership that you're going to own the property, it goes down to 2 or 3% in those last few years. Also, a big one that I always try to warn people about is make sure that the sponsors are estimating their future property taxes, because especially if they're buying a property for a lot more than the previous owner bought it for, like if the previous owners owned it for 20 years, there could be a massive property tax increase. And so just asking them, like, are you accounting for the new purchase price as the tax assessed value in your underwriting? That can be a really big one. And so those are just two simple things to look for. And then I can't neglect the market, like make sure it's a good market. People are moving in, not moving out, and there's opportunities for employment.
Yeah,
Those would
absolutely.
be my top 4.
Yeah, all great points. Chelsea, I'm going to turn to you. Is there any kind of non-negotiables that you look for any given project before you jump in?
Well, Sarah definitely had some really good points from an underwriting perspective. And if you're, looking to, I guess, invest passively, it's just don't be afraid to ask questions. Because, these are all great points, right? To look at, is insurance is likely going to go up? Taxes are going to go up. These are some of the key metrics that can make or break your business plan, your cash flow. We also, one of the ladies mentioned earlier, I think it was Ruth, about debt, like what kind of debt? Is it fixed debt? Is it long-term? If it's floating, is there a rate cap? These are all things that usually just come with experience. So again, just not being afraid as a passive investor to ask questions and really understand, like Sarah said, the team members. Who is going to be the person that I speak to in regards to distributions? Who is asset managing? Who is, the boots on the ground partner? Also, knowing and understanding the property management company and what their track record is. I think the property manager is absolutely like the most integral part of what we're doing, and they will also make or break your business plan very easily. So understanding them, how they work, is really important, and just doing your, as an owner and operator, really doing your due diligence. And like I said before, I think erring on the side of conservative across the board. And I love that Sarah brought up rent growth. Like, if you see anything like 10, 12%, like crazy numbers from 2021 or 2022, like, as we know, that's not sustainable. So yeah, it takes, the sniff test, right? If it's too good to be true, it probably is. And just constantly look at more deals. It's an education component to it. And the more you are familiar with it, the more comfortable you feel, and just know, like, and trust the people, the owners and operators, and then usually, the deal follows.
Absolutely. Yeah, that's great advice. Ruth, how about you? When you're looking at a deal or an opportunity, are there some specifics, and maybe even as so far as like certain markets that you're focused in, or anything like that?
Well, for me, originally when I started in my mentoring group, I picked, I want to do Texas and Florida. But the thing that I found is I choose the team and their track record, and can they manage that kind of asset? So I've moved around a little bit more. And so now I'm in like probably 7, I'm in like Texas, Florida, Georgia, Tennessee, Alabama, Arkansas, and there's another one, but yeah. And so I usually go with the teams, and I like to see and I used to be really strict about it. I have to have boots on the ground. But if, we own a 90-unit property in Nashville, and, the asset manager is there like 2 to 3 times a month on site overseeing construction. So to me, it's not as important if I know someone's going to be boots on the ground. Also, I get like 20 deals a month, and like what Sarah was saying, like the first thing I look at under the underwriting, what is the rent growth? Like there was one deal, like 38% rent growth. That just goes in the trash right away. And so also, I would never invest with someone from the internet that I just met. And, it's a people business. And I say, if you're new to it, spend your time getting to know people and seeing how they do, and talk to other people that have invested with them and what are the results that they've gotten. Because I'm a gut instinct person. And then I like to follow it up with due diligence by asking questions.
That's awesome. Yeah, one thing that I guess I think everybody kind of mentioned was team, and we all, it's very much a team sport, and I mean we're all taking down large assets, and it takes a really good team to put all those together. So Great to hear that. So we have a lot of our just kind of database and all that. We have a lot of new investors, and they're like, I don't know where to get started. And so any kind of advice, or you guys had touched on a few of these, but any kind of advice for a newer investor looking to enter multifamily, and maybe some mistakes they should avoid. Sarah, if you would mind kicking that off.
Yeah, so for newer people, I would say always trust but verify what you hear. There are other people in the business who are just trying to sell education courses and may not necessarily give you the value, but there's also some amazing educators out there who can really give you a leg up in getting started and getting the education you need. So, just trust but verify. If you are going to get coaching, I think there's some great coaching out there. And know your investment, know what type of investment you want to be part of, and some resources. I don't know if this is the resource section, but I was just thinking, there's, in my mind, 3 different areas where people can really get hung up in this business. So one of them is mindset. And I just read this great book by Ed Milet called The Power of One More. And it's basically everything he's learned in 30 years about how to have a business-oriented mindset, how to overcome obstacles, focus on the good, not the bad, and just tangible advice. So, if you want the mindset to get started, that was a great book. When people are just interested in investing in apartments and kind of learning the technical details, the book I usually recommend is Ken McElroy's book, The ABCs of Real Estate Investing. And it was one of the earliest books that actually talked about how you value commercial real estate and how you make money and how you do these value add strategies. And when I read the book, 10 years ago, my mind like exploded. It was amazing. So the ABCs of real estate investing, if you want more technical. And then lastly, if you're growing a business, Who Not How, by
Dan Sullivan.
Dan Sullivan, yes. So those are my resource tips.
Awesome. I'm in strategic coach, so if I can get that,
serious?
I'm in trouble.
Nice.
So, I might get some emails. So we're gonna just kind of switch gears just a little bit, Chelsea. And so just kind of curious, you've been in a number of deals and all that, and curious to how you measure the success of your multifamily investments. Sometimes you put tons, and I've had deals where I put tons and tons and tons and tons of work into it, and then I hit performa, but not I didn't have cap rate compression on my side, and so we had a good return, but I had some others where I cap rate compression falling behind me, and so we made a lot of money. So kind of curious as to kind of your thoughts around what that success looks like for multifamily investments for you.
Yeah, there's a lot of variables that are changing in multifamily as an owner and operator, and our approach is we're tracking everything. Like, we do KPI trackers, and every week we're meeting with our on-site property management and GP team and looking at everything from how many leads came in, where did they come from, how many turned into tours, how many turned into applications, what's the income, what's delinquency, what's current rent, how many work orders. So week over week, you're not just getting on and saying, oh, okay, like, how are we doing this week? Like, you're constantly trying to compare yourself to the week before, because you're wanting to trend upward in all directions, not just occupancy and income, but in efficiencies as well. So I'd say anybody who's new to the space and they're getting into asset management, this has been such a great tool for our team, and it just holds our on-site managers accountable, and it really keeps us all on the same page, and we can see, oh, okay, we're even tracking what units are being remodeled. It's like, well, why does unit 302 keep coming up week after week after week? Like, what's going on there? Because there's just a lot to track, and there's if you own properties with hundreds of units like we do, you can't keep track sometimes of the small details, and everything is related, there's a nominal like cost to it, and the cost eventually adds up and will either positively or negatively impact your return. So just, I would say overall, keeping a great KPI tracker for all of your communities.
Awesome. And then again, Ruth, we're gonna change gears just a little bit, but what are some of the biggest challenges you've faced, I guess, as a multifamily investor, and just kind of how you've addressed them? I know, for us, a little more recently, we've had insurance increases, and so we've been having to shop that pretty hard, and try to make that up in some other areas as well. So I'd love to, if you've had some challenges just kind of throughout your career and all that multifamily, I'd love to hear what that's looked like and what you've done to kind of navigate that.
Well, one of the biggest challenges, I mean, when I first got into this, I think the cash flow was probably 8 to 10%. And it's like, oh my God, 8 to 10% and no taxes. And, and people were like tripling their money, and like, with the bridge debt and everything. I think, if it's bridge debt, maybe you could have done that. But now with the rising interest rates, it's been a real challenge if you didn't have rate insurance, you know what I mean? So that's been a challenge. And so now I'm seeing like there's lower cash flow. And so, you always have to decide what your outcome is. And, for me, initially it was cash flow and tax savings. And like, if it's cash flow, then like maybe it's not the best investment for you at this time, just because I feel like that, instead of 8 to 10%, now we're seeing, 5%. So, but I still think it's a great investment, regardless of that, and then also, again, like I said, the floating rate loan has caused some deals to go sideways if the sponsors weren't prepared for the rate increases.
Awesome.
Yeah, absolutely. And kind of on that note, we'll keep it with you, Ruth. So, what do you see as the future of multifamily investments? Are you bullish? Are you bearish? Or are you trying to get more active? What is your outlook for the next, let's say, 12 to 24 months?
Well, I just attended this Tony Robbins financial event where we spent 5 days with he brought the best economists and billionaires and people to help us understand there's different buckets. Like there's the growth and risk bucket is where you want to put multifamily. And then there's the security bucket, which would be, your cash, your homes. And so, even though multifamily is in the growth risk bucket, I still think it's a lower risk than something like venture capital or a hedge fund or something. And so, I'm waiting the next few months to see, there's a lot of talk about the recession. And I don't know if you guys know who Ray Dalio, he was there, and he just said, everything that you're investing in is going to go down 70% in your lifetime. So that, that made me pause a little bit. So you have to take what these people say with a grain of salt, right? But I'm still all into multifamily. I'm planning on doing at least another 1 to 2 deals this year. And I just still love it. I think it's, Tony Robbins also talks about diversification across 15 uncorrelated assets, and I don't believe that the whole real estate market, if you're in 10 different markets, that every market could go down 70%. So for me, I feel like the multifamily thing is a good way to also to diversify within your portfolio. So I still love it.
Yeah, absolutely. That's a great point. Chelsea, how about you? It sounds like, you're definitely leaning into operations. So, what is your outlook over the next, year or two?
Yeah, I definitely agree with a lot of what Ruth has said. I'm still very bullish on multifamily. What's happening in the multifamily space doesn't necessarily correlate, or most of the times it doesn't, to the single family space. So that's also a misconception. And it's also, a market by market case. I would definitely say deals are fewer and far between right now. And again, going back to underwriting just extremely conservatively for the next 2-3 years, or just in general. And just partnering. I think this, if it hasn't already, the next year is going to kind of weed out the people who had the, like we said, the bridge debt with no rate cap and made some really unfortunate errors, 2021, 22 also covered a lot of errors because you could make them because everything was going up. You could just constantly increasing rents. And we're just in a different market, and I'm going all in on the relationships and the markets that I do have, and really working off market deals with the brokers, and leaning in on my lenders, my property managers, the people that I consider my core team members, as far as the deals that we own together, and acquiring new deals. Like, these are just really valued team members, and we're always strategically looking at ways to do things differently and or better.
Awesome. Very cool. Sarah, how about you? What is your outlook for the next year or two?
Yeah, I'd say still want to be active, but just be a little bit more cautious than you had to be the last few years, especially since we don't have that nice cash flow buffer that we used to have 8 to 10%, right? Like, things could go wrong by a lot if you'd still make 5% cash flow. And, those days of having that big of a buffer are, not here right now, but hopefully they will be soon in the next, 18 to 24 months. But just realize that with lower cash flow, there is slightly higher risk. So finding those investments that you really feel totally confident in, that you feel great about, you can sleep at night, that your business plan is solid. Those are the kind of deals that I'm looking for right now. Ones that you can buy at, a deep discount from a distressed seller, or where you have some awesome terms, like the seller's going to finance the deal for you at, 4% interest rate, and you don't have to bring a lot of cash to the deal, because it's a lot easier to make a deal work when you're paying 4% interest than when you're paying 8%. So just some things like that. Just want to be active, but want to be a little bit more cautious right now is my plan, and really buckle down on asset management. So those are my plans for the next 24 months.
Awesome. Yeah, that's great advice. Yeah, we're kind of doing the same. We've been, operations. So, but Sarah, we'll kind of stay with you, but any goals you care to share for this year, and or just they can be multifamily or otherwise, but love to hear if you have any goals you want to share.
Yeah, I kind of just said them, but just real quick, I want to do at least one really amazing home run deal with some of those criteria I mentioned. And I also want to make sure all of our existing assets are raised up at least to their projected performance, if not above. So just really focusing on that this year. And, I think the other thing is just strengthening operations all around, getting processes in place, written procedures, making it more of a business as much as possible, and just, buckling down on those processes and operations.
Awesome. Chelsea, what about you? Any goals you care to share?
Yeah, 2023, I've taken sort of a shift in definitely always looking to continue to grow, but I'm putting more time back into some philanthropic opportunities, both locally and nationally. And that's partly in due because my design firm is now fully equipped and running with less of my oversight. And my multifamily investment firm I'm not, looking at 10 deals a week anymore. So I just truly have more time. And this is a time in my life where I'm excited to have free time and give back to others, and just feel really fortunate to have what I do have. And multifamily has definitely provided for a lifestyle that allows more flexibility in my time and my schedule.
Awesome. That's cool. And then Ruth, for you, any goals you care to share or talk about?
Well, one of my goals this year is I'm selling a large property. So I'm looking to do my own joint venture with some other partners instead, with not a syndication. So that's exciting for me. And then on the contribution level, I've been put on the capital raising committee to help my local museum raise money for expansion. I'm an artist. I come from an art background. I call myself the accidental businesswoman. And so I did art for about 30 years, and it's an honor to help this visionary museum help them raise money. So I'm excited and then I'm also a member of Tony Robbins Platinum Partnership. So I do a lot of travel and networking with them this year. So that'll be a lot of fun.
Awesome. Very cool. So yeah, now We're going to kind of open it up to the audience for just a Q&A. We got Danielle, first question here, and whoever wants to answer it, go ahead. But she asked, what is the best advice to start getting on brokers' lists for deals and getting started? How do you get your name out there?
I'll just give a simple tip. My advice would just be to get on your Google search engine and say multifamily brokers in, Colorado Springs or whatever market you're interested in. And then you'll usually see all the top brokerage companies as the results. A lot of them like CBRE, Marcus and Millichap, JLL, and then you can just go on their website and sign up for their newsletter or their listings for whatever area you're interested in. And that's a super easy way to get access to deals to underwrite. And, as you get more confident, then you can go call the broker who's listed on those deals offering packages and start chatting. So that's a simple way to do it.
Yeah, I remember going through the early process of identifying a market, and you're so nervous calling up brokers. Are they going to take me seriously? And to add on to what Sarah said, in addition to getting on their list, is if anybody sends you a deal, first, when you give criteria, be specific. Don't say I'm looking for a C-class value add property in Colorado Springs. Say I'm looking for a C-class property, 1970s vintage, high occupancy between 1 and 5 million. Get specific, because I think that's going to narrow down and somebody's going to know what to look for. And when brokers do send you a deal, whether it works or doesn't work, just get back to them, let them know, and you just start building rapport naturally that way. And people start to take you seriously. And then I think really, if you're really serious about investing in the market, is absolutely go to the market and be present and just start showing up and, going meeting for, if it's not a tour, getting coffee, lunches, whatever it may be, just to show you're serious. And over time, people are going to start sending you those, the true off-market listings in addition to those on-market listings. And it's a relationship business, not a transactional business, for sure.
And one thing I learned too, for in the ecosystem, you don't want to just keep, going and looking at deals and then not putting offers in, because it's a really small club, and you want to make sure you respect the relationship.
Great advice. Then kind of just to follow on what everybody mentioned too, a lot of brokers, whether it's a pass or not, a lot of them just want feedback. So as long as you communicate and you're upfront and you don't hee-haw around and things like that, a lot of people respect that. And we were offered, actually, you're like, hey, we got a deal, it's off market, and it's actually a nice looking deal, but we were like, it's just just doesn't quite fit our criteria. So we were like, hey, please let us know if you have anything else, but this is a little bit outside our box and just doesn't quite work for us. So, and they respect that and like, hey, no problem, bring in the next one. Any other questions for our panel?
I got a quick question just while we're waiting. What did that first multifamily deal look like for you guys? So, Chelsea, I'll start with you. But how did you break into the multifamily?
Well, I'll make this as short as possible. So, I was living in New York, born and raised, had a very successful career there, and I thought when I reached a certain dollar amount in my income, my bank account, that my problems were going to go away, life was going to be great, and it was so far from the truth. And you talk about what's your why getting into the business. And at first my why has changed. It's done a complete 180. My original why was, multifamily is sort of a ticket out of this 9 to 5, which it was. And that I was going to create income for myself and my family. And it slowly turned into, this is so not about me. And it was about the people I'm working with, the tenants, my residents, and the people that worked at the properties, the investors, and the why really shifted. So, and I know it can be hard at first. A lot of people come into the space to create financial freedom. And you quickly realize that there's so much more to it. And like I said earlier, like I feel a responsibility to all of my tenants and each of their families. And it's a big responsibility and to do good by people. So.
Yeah, 100%, especially when you're taking on friends and family, other people's money,
Yeah.
it's a big responsibility you're carrying.
Definitely.
Ruth, how about you? How did that, what did that first deal look like for you in the multifamily space?
Well, like I said earlier, I had a family property and I didn't know anything about running it. And so I wanted to educate myself on how to run that. I didn't know I was going to become a multifamily investor, and then I just fell in love with it. And so I learned how to optimize and maximize that deal. And so then I just the first day when I joined an ecosystem, my mentor had a deal, and he's like, well, what about this deal? And then I invested in that deal. And I think I called the asset manager like 20 times a day because I was like new to it. And so that's it. And then I've been hooked ever since.
Awesome. Very nice. And then Sarah, I know you said you started on the small side with duplexes, but how did you make that jump to the larger multifamily space? And did you do it 2, 4, 8, 16, so forth, or did it go, was there a jump there?
There was a big jump. And we were happy buying like fourplexes and duplexes, and until we learned about this idea of partnering with other people and joined an education group, Brad Sumrock's multifamily mentoring program, and just kind of saw the potential there and learned what we needed to learn. And by being surrounded with like-minded people, we were like, me and my husband, we were just encouraged to think bigger. We were thinking our first deal would be like, maybe a 25, 30 unit property. And we ended up doing 100 units for our first property as a general partner, which was totally, doesn't seem possible. Like, I don't think we could have done that on our own. So being surrounded by this great community and kind of, when you're surrounded by people who are buying 300 units, like buying 100 units doesn't seem like that big of a deal anymore. So just setting your expectations and having people cheering you on, I think was a big shift. And as far as that duplex story, if there are people who want to start doing stuff themselves, the first duplex that I bought, I walked into that place and I was like, this place has old brass fixtures. It has white linoleum on the floor. Like, I am never buying that. I would never live here. And then I went home, I slept on it. I was like, what am I thinking? This place is indestructible. Like, this is a great rental property. And I set my expectations aside of what I would want and thought of what the tenant wanted. And that deal was like the best deal we ever bought. It was a 12 cap at purchase. Like, it was great cash flow, very good deal. Obviously that was over a decade ago, but just try to put yourself in the tenant's shoes and do what you do. Run your business as a business, not as what you would want for your own personal residence.
Mm-hmm.
Awesome. Pat has a question, and I'll kind of just open it up for the panel. So, a couple of us mentioned, friends and family investing in multifamily with us. How'd that go? Anybody want to field that?
I'll go. So, before I became a GP, I was just doing my own thing, and I was super excited about it. And so I just started sending emails to people, hey, this is what I'm doing. It's amazing. And just educating people about the results I was getting and how excited I was about it. And then I always tell, I don't sell. So if I see that someone's interested, I want to know more, like, can you tell me about this? Then that's an opportunity. Otherwise, I don't push it. If like, I would never do that. Then I'll just go the other way. But it's, my mentor told me if I want to attract investors, I need to educate them. And so before I even had my first deal, I spent about a year doing educational newsletters. And before I had my first deal, so people knew what I was doing, so that when I did have my deal, they were ready and excited to go.
Awesome.
Yeah, I love that. I feel like you're in this business, we're never selling anything. Like, we're presenting an opportunity as like an alternative, investment. And I think the more you just talk about it, like we've said, and you educate people, particularly with friends and family, those are naturally, the people you're with the most. And it's also the best people to practice your, education on. And then action, people start seeing what you're doing and that you're taking it seriously. And it just takes time, and, they start investing, and then, they tell your friends or your other family member, and it sort of just trickles. And then of course you get to kind of like outside of your sphere of influence into social media, whether, LinkedIn's really big, or Facebook, and just constantly letting people know what you're doing. Don't assume that they know what you're doing. And just continuing to educate them.
Awesome. Well, we're getting pretty close to time, and yeah, if you guys love to, I guess, kind of start with you, Ruth. Love for people to be able to hear how they can get in touch with you, and welcome to throw your stuff in the chat if you'd like. But yeah, how do people get in touch with you?
I would send them to yesmfnow.com/invest. And what you'll receive is you'll receive articles about multifamily investing, and then you'll be able to schedule a call with me.
Awesome. Chelsea, what about you?
LinkedIn, Chelsea Garber. Facebook, shoot me a message. Also, similarly, you can catch me on my website. It's just ascendtoequity.com. And you can click up and just get on the newsletter, get updates, see what kind of projects we're working on, and always happy to, set up a call and just connect and network. And yeah, I just love meeting with people.
Awesome. And Sarah, how does everybody get in touch with you?
Yeah, just kind of the same. So my company is regencyinvestmentgroup.com is our website. And there's a place where you can, shoot me a quick note, or sign up for our company newsletter with investing tips. And I'm also on Facebook and LinkedIn, Sarah May, and I was happy to, make messages on there and respond and start a conversation.
Okay, awesome. Well, really appreciate everyone. Really appreciate you guys coming on, and appreciate everything. We'll be sure to we'll send out the recordings and all that. Give us a few days, and we'll be sure to post all over social media. So, if it's okay, can I take a screenshot with you guys real quick, and then we'll have that to post as well. So, 1, 2, 3, cheese. Cool. I don't think I blinked. All right, we're good. So, cool, everyone. Well, you guys have a great night. I'm just excited we didn't have a tornado. So, but anyways, well, have a good night. Thank you very much for your time, and we're excited to have you guys. So, thank you.